This is Investing Ideas by ValueInvestAsia.com.
This week, we talked to Mr. Tan Chun, an investor from Skyfield Capital based out of Sydney, Australia. Chun has been investing in the stock market for a long time, but I would say that he has quite a unique style of investment. He almost approached the stock market like a venture capitalist, looking at high growth, high potential company that is still undiscovered by the public. This week, he shared with us one of his key ideas, a fintech company based out of China, where the growth potential is still far from over. Without further ado, let's get started.
From ValueInvestAsia.com, this is Investing Ideas, where we talk to investors from all walks of life, learn from them, and find out some of their favorite investment ideas.
Today we have a very special guest, Chun from Skyfield Capital. Hello, Chun, how are you?
Hey, I'm good. Thanks for having me here, Stanley.
Yeah. So, Chun I think you have been a long-time investor and we have known each other for a while and you have always shared with me great investment ideas. Why don't you just give a brief background on your investment journey and what do you do now at Skyfield Capital?
Yeah, so I'm an engineer by training, but I have had some financial experience as well. I've always enjoyed investing. So typically looking at Benjamin Graham as a value investor, that's a starting point. But over the course of my career and life, I have taken different nuances and different approaches to investing. So in Skyfield Capital, it's a family office. So we do primarily private investments, and we are often the bridge or the financing solution between the cash flow need of a business and the revenue that they generate. So we are, in essence, the funding gap. So that means we are quite flexible on how we can structure our financing solution. So that's what we do. Quite deal agnostic, per se. We do public investments when the opportunities arise. So we're quite long-term by nature and very patient. So what that means is, we will only sell when we realize we have a mistake, and that's the only reason we sell together with the founders. And when I say patient, meaning we're not incentivized by commission or transaction fee. So meaning we can be sitting along and not doing a deal in 2 years, but we can also do 3 deals in a quarter. So that's how flexible we are,
Right.
by and large. Yes.
Okay, cool. Yeah, I guess giving you the flexibility as a family office, definitely you can be much more diverse in your investment, and also, you don't have to have a quarterly target to reach, similar to hedge funds. But on your personal note, how would you describe your own investment style? When I ask you, what's your main strategy of investment? How would you describe that?
Yeah, good question. I don't think I covered that in my description of Skyfield Capital. So I tend to hold a quite concentrated portfolio, and that's the reason being, I have, if something is not simple enough for me to understand, I will stay away. So we're not a hedge fund. I don't have that trading mentality. So it's a buy and hold type of a mentality. And because it's very concentrated, I need to have high conviction. So that sometimes it might take even years for me to believe and include that in my portfolio. And I typically like very long-term circular trends, like the rising middle class in China. That's a theme that is not going to change. It has a lot of tailwind. And when you have that kind of long-term thinking, and when you have the privilege of waiting and being patient, and when you see great companies buying quality companies, they're typically not cheap. So meaning you're not getting a cigar butt, you're not looking for value opportunity, but rather, for the lack of a better word, I think you're looking at compounders and then figuring out what a fair price to pay and the reason why you get it. So that's my style in the public sector, that I manage my own portfolio on behalf of my family members.
Cool. Okay, and I think that the the idea that you're going to present today also kind of fit into this investment philosophy. Why don't you tell us a little bit about this company? It's quite a unique company, which, to be honest, I haven't really come across, and I find it fascinating. But why don't you explain a little bit what does this company do?
Yeah. So the target company that I'm going to talk about is Jianpu Technology. The ticker is JT.
Okay, so listed in the US, right?
On the Nasdaq Stock Exchange,
Okay.
late 2017. They are essentially a marketplace by birth, founded in 2012 by 4 founders with experience in PayPal, Amex, Baidu. So it's a combination of consumer online marketing as well as financial experience among the background of the founders. So they generated around, I would say, close to 300 million US dollars revenue in 2018. And they made a loss of, say, 20 million in the same year.
Okay.
But they have 120 registered users in China online, and that's quite massive. So what they do is, if you are a user in China and you have a credit need, meaning you need a credit card or you need to apply for a loan, so they don't have traditional brick and mortar branches. So you go online and you search on Baidu or you search on some other search engines in China.
Okay.
You will hopefully come across their brand, Roam 360. So that's the brand that they, the products are wrapped around. And it's a marketplace, meaning you key in your need, and then you have a list of traditional, credit card companies or car loan companies or even mortgage companies.
Okay.
And then you filter your criteria, and they will send you based on your need to the right provider, and they collect fee. So that's what they do. They collect fees, like per credit card success or per loan success. And on top of that, I think there's a third component of their revenue stream, which is the sales and marketing fees that they manage to monetize from the banking and financial institutions. In the sense that with the data that they have through the 120 users, whether it's you're based in Shanghai, you're looking for a loan in Tianjin, or you're looking to purchase a car loan, or whether it's secure, unsecured, your disposable income, how long you intend to pay, and have you had a history of owning credit cards, and have you had late payments, and how do you use social, and how do you use WeChat Pay or Alipay? Based on all structured and unstructured data, they can package it as a sales and marketing tool, like on a SaaS recurring revenue basis to banks or to insurance companies that they're happy to pay, because it's like a targeted lead. And it has a high conversion rate as opposed to just shooting your marketing dollars to Google ads or Facebook in the West. But they clearly have their own system in China as well. So those are the 3 components of their revenue. And the bulk of their expenses, essentially sales and marketing, because that's how they grab and acquire customers online.
Okay.
That's their product and marketing, development team. I call it the R&D bucket. So essentially every single periodical time, you need to introduce new products, to capture users. So, and then the third one is SG&A, which is, the management overheads. People who are not directly involved in acquiring customers, but people who are like the managers, the admin manager, like the CFO, CEO, and the CEO. So those are the expenses. And they're in the right place, in the right market, doing online and mobile acquisition of consumers on behalf of all the financial institutions. So that's a nutshell of their business model.
Okay, but it seems that they have quite a very interesting business model. But from all we have heard about China is they are so big in mobile payment and mobile banking, right? Especially through Alipay and WeChat Pay. Does this Jianpu technology work with WeChat Pay or Alipay to provide to link up the data, or to link up the loans connection, or are they merely servicing the offline financial institution?
So one thing is they are an independent platform or independent marketplace. right? There's a nuanced difference between a marketplace and a platform, but I can elaborate further for the benefit of your
Yes.
later.
Yes.
So they do have working arrangements with Alipay and WeChat Pay. But when I say working arrangements, meaning they don't advertise on Alipay and WeChat Pay, but they have like a traffic sharing where the data is being shared across online and on the mobile app with big payment providers like Alipay and WeChat Pay. And the reason why they can differentiate themselves with say Alipay and WeChat Pay is you don't want to be being bundled and being sold with your interest not necessarily aligned with, say, a provider. And consumers today would like to have choices. They need to know what they're buying and not just being spoon-fed. So there's an element of independence and there's an element of choice that allows them to differentiate from, say, Alipay and WeChat Pay. But if you have used WeChat Pay and Alipay, there are also literally a library of products there. But they don't give you the what I call by the curated financial content that is pertain to your needs. So typically they also go through other platforms like Chrome 360, which is a very good example.
Right.
So does that
Okay, yeah, definitely. And would you consider them being the largest player if we disregard WeChat Pay and Alipay having their own database? But this kind of marketplace is Jianpu the largest one in China right now, or there's a lot of competition?
they are the largest by just by the sheer 120 million users in pure financial recommendations. So because there are also many other financial intermediaries and they have larger captive base. I can give you an example like Lufax. That's an online insurance, and they have many more other users than Jianpu. But they are in essence, you're just buying a product from Lufax or a white label product from Lufax, but you're not giving the consumers the ability to research and read up and educate themselves on what is actually my need. Is that banking product suitable for my need? So the ability to give choices and price transparency or price comparison in that format, as well as very targeted to where you live and where you work and how much income you get. So that I think is is one of the many reasons that I like about Jianpu that I think can work in China.
Right, interesting. Okay, and apart from the description of the business itself, what ends up attracting you to this company? Maybe you share some of their growth matrix and how do you see them becoming in the next few years?
Yeah, so very good question, Stanley. So I came across Jianpu 2-3 years ago as a private company trying to raise capital from us. And I was blown away by a lot of their metrics. But then we never participated. We just felt that the private sector valuation was a bit frothy at the time in China, and that has proven out to be the case when they got listed. But let me just share with you what I think about Jianpu by and large. First of all, they're in the right market. It's China. They have the largest population. Not only on the planet, but also on mobile as well as online. And they're very engaged. They use the phone for a variety of reasons, mainly powered by the WeChat and the Ali ecosystem. So that's one thing. There's a rising middle class, and they have rising credit needs, and it's the largest online mobile penetration in China around the world. And with rising disposable income, they will require more credits, and without just like how you might have say 50 providers in say Holland or in say Thailand, in China you're talking about thousands and thousands of financial service providers just on loans itself. It's just mind-blowing when you have so many choices and they have a lot of price competition where it's so difficult to differentiate what is the interest rate and what is the component that I'm paying for, whether it's a referral fee or commission fee or whether this is a click fee or this is an advertising fee. So it's very it's mind-blowing that it's hard for a consumer to really figure out what they need. So this marketplace model I think can work in China because it's just facilitating the user to the need. So bridging a user to a financial product. And the financial product could come from a banking institution or financial institution. And they collect a fee in the middle. Meaning,
Right.
why I say it's important is there's no credit risk, right? So they're not a lender. So they're not, they don't need a license in the first place, and they don't need to worry about bad debt. So it's all driven by the user. So what the content that is on the platform is generated by the platform, is served to educate consumers so that they are financial literate to chase and produce and confirm and procure their own product on their own merit. So when you do that, the liability ends with the consumer or the banks. So it's not on the platform because they're just facilitating the meeting of people.
Yep.
And that's what I like about this model in the sense that there's no credit risk. And it's a very scalable model. The four founders, one of which is a Baidu search engine manager. So they have managed to amass 120 million users. That's really impressive. The way they scale and acquire consumers at a much lower rate, and or I would say at a much better unit economics than all the banks, whether it's online banks or whether they're offline banks. As just the way where it's the same principle.
Yep.
I aggregate users on behalf of all the banks and financial institutions, and I commoditize their products. And that's how I monetize them by getting them to pay for the data and for the users. And in the process, I collect a fee whenever a transaction is made. And they have become the Baidu of financial services. And that's their bread and butter.
Right.
They want to be the search engine platform where they can advertise and monetize advertising fees, but in the process, they have added transactional functionality where they can also collect a fee based on the volume. So they have multiple ways where they can continue to grow, and that's one of the few reasons why I like about the business. And given that it's a mobile and online driven business, this is a typical venture capital type of deal where it's highly scalable. About 60 to 70% of the expenses are tied to sales and marketing, and that's just trying to acquire more and more users. But once you have all these engaged users on your platform, you can turn it off.
Yeah.
And once you turn it off, all the incremental revenue flows straight down to your bottom line. And that's the beauty of venture business, where you pay a lot upfront and you pay a little bit of market to establish your brand name, and every marginal cost gets better and better with and better and unique economics. So, in a way, your revenue will be growing at a much quicker rate than your expenses, maybe 5-10 years down the road, and that's the beauty, and that's what you are paying for.
Yep.
And that's what I like about Jianpu in China.
Yeah, the business model seems quite easy to understand, and also, like you said, highly scalable. And they have if they turn off the marketing cost, it's almost like a fixed cost business. But you also talk a little bit about competition, right? Competition in China is almost like cutthroat amongst the financial institution, but I would expect the competition for this type of marketplace is also immense. In your own research, have you seen how they are able to, gain an edge over competition, or do you already consider them as the de facto platform going forward, or do you still see some risk that it's very possible it could be replaced by something else in the future for this company?
Yeah, so I'll just give my lens on competition. Like you say, in China, competition is on another planet. There are thousands of other marketplaces, just like what Jianpu is doing, and there's no the differentiator is execution risk. And building a marketplace, especially a two-sided marketplace, is extremely capital intensive and difficult. You need to know, for the sake of discussion, it's hard to have only 5 banking partners, and when your user comes, I only have 5 choices, and they might just need 10 choices. And once the users don't come, the banking partners don't come over. So it's hard to build this liquidity, which is why a lot of marketplaces cannot work by and large. You need to have the breadth of both the user as well as the financial partners in this case. So typically, as the industry matures, there will only be one, if not two winners. You can't, the market is not large enough to have the third or the fourth because your margins will only come down, and that's just natural trajectory. And the winner takes all, and they are by far the largest marketplace. And I attribute that to the founders. They have the payments and financial know-how, and they have the search engine background to power the business. And I find that combination between the founders really appealing when they approach us. So that's one thing. Second, competition is always going to come. And I fear, I don't think the management team is aware, but I fear that the competition, like you say, might come from Alipay or the Ant Financial, or even a WeChat system, because just by nature of the number of users, they have 800 million users over there in WeChat, or even TikTok, which is another company that has a Toutiao business as well.
Yep.
That's my fear. But what gives me comfort is, the WeChat ecosystem is in essence a social platform, and they also have a gaming platform. What gives me comfort is Ma Huateng has always tried to venture into e-commerce, and they have never done so. It's not in their DNA. It's gaming, social. Likewise, Jack Ma of Alibaba, they also would love to have the e-commerce together with social and together with gaming. But Jack Ma and the whole team, the DNA is e-commerce, and finance is a secondary tool to facilitate e-commerce. So that gives me comfort that the Jianpu network and the DNA of the team is essentially consumer marketing and financial products. And it's hard for them to venture elsewhere. And therefore, it gives me comfort that WeChat Pay is hard for them to replicate what they do for financial products and services. And it's hard for people to say, I go to WeChat for social and gaming, and I just buy a lot of services. But when it comes to independent advice, I'm not so sure whether I trust the WeChat. I might trust a lot of people within WeChat Pay, but they're also using any other brand. So the market might be large enough for a few brands, but I don't think it's the nature of a marketplace. There's only one or two handful, and then the rest will just peter out because more and more users migrate to more and more social elements and more and more banking partners, and that's how I see it.
Yep.
So I don't have a crystal ball, but I know that the brand name is really difficult to establish. You need to invest in above the line. And the testament that gives me comfort is there are 120 million users, and it's a transactional platform.
Yep.
Meaning it's not just working and social linking here and there. It's not just content driven, but people actually do transact on the platform. And the banks actually pay on a SaaS model to acquire the users. And out of the 120 million users, as of the prospectus in 2017, I remember 80 million are monthly active users. So that's quite a high component of engaged users, and also more importantly, a transactional user where you can click a fee, like revenue. On top of that, you can monetize by selling advertising fees.
Okay, yeah, maybe we talk a little bit about their shareholder structure as well. Given that a lot of tech companies in China right now, although they might be founder-led, but they have get investment from either Tencent or Alibaba. In this case, have any of the two giants invested in them, or are they still pretty much founders-led, founders-owned?
Yeah, so there's a common saying in China. As you grow to a certain size, you will end up being absorbed into either the Tencent or the Alibaba's ecosystem.
Yeah.
And in a way, it's like, say, you take my capital. If not, I invest in another competitor to you out. So, but fortunately, this team of founders, although they own about 25 or 30% of the company, but they have absolute veto rights through their Class B shares, and that's very typical of the tech industry, whether it's in China or in the US. But they have managed to secure funding from other VC firms, not only in China, but also in the US. And they've managed to institutionalize that process, which in a way gives me comfort. That sets a level of governance in Chinese entity listed in NASDAQ. So yes, they have managed to be truly independent from the shareholder base and staying true to the mission of being an open and independent platform for the users by not taking by not mixing shareholder relationship with business alliances like most other tech companies.
Yeah. Okay. Yeah. You mentioned that they have a market cap roughly about 600 million US dollars right now.
Yeah.
Given that their sales is about close to 300, that's about 2 times sales, right? And they don't have much. They don't have profit, so it's hard to value them on a PE basis. How would you value this company on your own research?
Yeah. So valuation is not my forte by and large, but I can give you some of the framework or some of my numbers to figure out what is a decent valuation. So 600 million, that's the market cap, and they have about 120 million registered users. So that translates $5 to acquire a user, and that's really cheap. I know for very established setups, whether it's a marketplace or a platform, you typically pay about 25 to $50 per lead, and that's not registered, and that's not active. So on that basis, it's a bargain for me, and that's how I see it. And in terms of going forward, there's a good comparable in the US by the name of Landing Tree. Ticker is TRE. They have 1 billion users, and the market values it at $4.2 billion as of today. Obviously they have a higher revenue. Because they have managed to monetize and sell many other products in addition to credit and loans. So they managed to get into mortgages, meaning home mortgages, which is by far a larger ticker number, and it's a more lucrative product, but of a much lower volume, and managed to sell insurance products as well. So in that context, you can see Jianpu growing not only the user base from 120 to say maybe 300-400 over the next 5-10 years, but also the number of other financial products that they can sell. So across multiple verticals, and they can continue to grow their SaaS model through advertising and targeted marketing. So by and large, when I like I said, when I am a concentrated, high conviction type of portfolio, when I buy, I don't intend to sell. And the only reason why I sell is founders have cashed out, like WeWork founder, or when they ship to another competitor, or I made the wrong assumption, or I made maybe another form of a blockchain type of related company that would just wipe out a marketplace. Okay. And I don't see it happening. So that's how I look at valuation of Jianpu.
Cool. I get the sense that this company maybe is more of like a tech startup type of company, where maybe the business risk itself is might be quite high, but the potential of it, like you said, the prospect of it, not only growing its user base, but also integrating and increasing more product range through its platform, that could has a huge impact in the future as well, right? That's the sense that I'm getting about this company.
Yeah.
Okay. Oh, that sounds pretty interesting and fascinating. So, for you as an investor, when you say that you are very concentrated, and if you have invested in, I guess you have invested in Jianpu, how do you look at allocation on this part? Like, how much have you actually been invested into Jianpu on your portfolio basis?
So a typical portfolio of mine would be 10 stocks, and that would naturally lend itself to say 10% of my portfolio would be in Jianpu.
Okay.
And typically, I look at different sectors, different currencies, different geographical regions. So Jianpu is a pure China play. So there's no influence of trade war. Its pure financial needs in China. It's very isolated from the rest of the world. And then when you buy a Jianpu ADR, you have the US dollar hedged in a way. So, obviously for the rest of the portfolio, I would then try and look out for very uncorrelated assets, like a sterling pound equivalent of a oil and gas sector maybe, or something else to just diversify away my risk. Because we concentrate the portfolio. So that's how I weigh out my portfolio. But then again, it's very difficult to find uncorrelated assets. As if you're daring enough, you can go to other cryptocurrency. But I would always have a grain of salt with that because it's proven yet. For very cyclical industries like oil and gas, you are literally timing the ups and the downs. It's not something that you can hold for the long term because they are in cycles. But for Jianpu, it's a tech play, it's consumer play, it's financial need, it's a big market potential, and they will continue to grow. And then it defies traditional physics where the bigger you grow, the higher you can extract the value, and the faster your bottom line grows quicker than your top line. That's the beauty of a marketplace. A true example would be like eBay. That's the board is that. The bigger you are, the stronger is your.
Yeah, definitely. Wow. Okay. I'm very amazed by this company, and thank you so much for introducing this company to our audience. Once again, this is Junhao from Skyview Capital, based out of Sydney. Thank you so much for your time, Junhao. I hope to chat with you again soon. Thanks.
Thank you.
Bye.
Thank you for listening. You can subscribe to our show on Apple Podcast, Google Podcast, Spotify, or wherever you get your podcast. If you are feeling generous, please give us a rating and review as well. This would greatly help other investors find out about our podcast. To access our show notes, please go to valueinvestasia.com/investing ideas and be sure to sign up for our email newsletter for more outstanding content and reports about investing. The show is for entertainment purposes only and should not be taken as investment advice. Please seek professional advice or do your own research when making any investment decision.